Hello, everybody, and welcome to the Mouthy Money podcast. I am joined by a guest today called Stephen McGee, who is the chief executive of a financial mutual called Scottish Friendly. Now, we're going to be digging in with Stephen to the topic of mutuals today. It's a kind of an unusual area of finance and probably not talked about that much, but it's kind of a way of having a company that's different to others. Now, there are famous mutuals out there, a mutual being kind of a member or employee owned or something like that. So John Lewis kind of springs to mind, that kind of thing. Stephen, before I dig in any further, welcome. Thank you for joining me.
Hiya.
Just before we dive into this topic of mutuals, just give us a bit of background on yourself and tell us about Scottish Friendly as well.
Okay, so hi, thanks for having me on. So, name's Stephen McGee. I'm the Chief Exec of Scottish Friendly, and I have been the Chief Exec for just over 2 years now. We're a mutual organisation. We've been around for over 160 years, and we're based in Glasgow. So, if you can't tell from my accent, it's quite a place quite close to my heart. I was born and raised just outside of Glasgow, went to university in Glasgow, and then my first couple of jobs are also in Glasgow, but I've not worked in Glasgow for well over a decade now, so it's really, really good when I got the opportunity to come back as CEO for Scottish Friendly and come back to very close to where I live and where I was brought up, and it's a part of the world that's very, very passionate, a big passion for myself.
Tell us about Scottish Friendly. What does it do, and kind of what does it offer to its customers and members? I guess you'd call them, wouldn't you?
Yeah, so we can use those phrases relatively interchangeably, and sometimes we do, but really, as a mutual organisation, we're here to support our members and provide products and services for those members. One of the big areas we are active in at this moment in time is ISAs and junior ISAs, so ISAs for children. That would be the main products that we have. We also have an over 50s, so a whole of life plan for people that are over 50. But we do service a lot more than that. So we service customers who have pensions, we have protection, so life and critical illness policies, a lot of different things. But we're based, as I said, we're based in Glasgow. We've got about 300 employees, and we service around about a million customers. So customers through members.
Yeah. So we're going to dig into this topic of mutuals, and obviously, from your position as the chief exec of a mutual, I get my sense is that you've got authority to talk on the topic.
Hopefully,
we're gonna. I mean, first off, it's understanding a little bit, why these kind of mutuals exist. I mean, I had a little look on the FCA website beforehand, and actually they have a register of mutuals that totals nearly 10,000. But then you actually dig into that list, and it's a myriad of different kinds of organizations, from sporting to kind of community-based organizations, and all this kind of stuff, which is quite interesting in how many different ways it encompasses, a structure for an organization. On the financial side, though, what is the story there in terms of what a mutual is and why they exist?
So mutuals have been around for hundreds of years. We ourselves can trace our roots all the way back to 162 years ago. But they came about because people and communities needed the benefit of insurance, and there wasn't that safety blanket of the state at that time. So it was all about pulling together, communities coming together and actually supporting each other. Some insurers actually started out as fire stations. Okay, so actually people couldn't afford to have a fire in the house, but they can afford to contribute a small amount of money to actually have a local fire station and therefore protect their communities from fire. Our origins are very much around providing people a lump sum benefit on their death. That was where we started out, to typically pay a bit of money towards funeral costs, but actually to support the families to survive, and prosper after that event. And that's where lots of mutuals, especially in the financial services, have came from. Those sort of localized communities, and over time we've been able to reach out and spread out and actually have a much wider impact. But we still have those community roots.
Yeah. So, I mean, it's interesting. It's very kind of grassroots from the kind of bottom up approach to building an organization. And as you say, a lot of these have very kind of historic, roots to communities. And obviously, Scottish Friendly is very kind of Glasgow based. And there's a lot of, I mean, it's kind of like you look at the way in which the landscape has changed, and there are still lots around. And as I said before, kind of probably one of the most famous in the country is something like John Lewis, which is obviously a retail partnership, so it's slightly different in that sense. But but that's what people are going to be really familiar on a kind of top level. But actually, there is a phenomenon here where kind of mutuals also go through the process of changing, right? So probably historically one of the bigger ones was Standard Life. That was, I think, back in 2004. They demutualized, and then of course we had LV equals a couple 2-3 years ago now. There was an attempt to demutualize it, which was rejected ultimately by the members, I think. Talk to me a little about that. I mean, there's kind of is the structure under threat, or what's kind of going on there with that?
So I think in my working lifetime, which spans 30 years now, definitely there's been a huge reduction in the number of mutuals, but it was probably in the first 10 years of that was where the majority of them. And some, you mentioned some famous mutuals, but other ones are like Nationwide Building Society would probably be one of the bigger ones that people would recognise. The Co-op, the shops and all that sort of stuff, that's another one. So there are big and recognisable brands across, but we don't really communicate well so that actually people understand what does actually being part of a mutual really mean. That's definitely something that I think as an industry and a series of mutuals we have struggled with. But why do mutuals look to demutualise? Well, typically there can be pressure by the members around the value of mutuality, and mutuals actually are looking to share the benefits with current and future members, and it's how do you get the right balance. And if you allow current members to actually really pressure for all of the value, then that's where you can get some real pressure to mutualise. And you had that back in the late 90s with people like Abbey National Alliance and Leicester, even the AA. All these people were pressured to demutualise because the members at that time could see the value at that point in time, and therefore actually get immediate value. Since then, as I said, it definitely has slowed, and hopefully now with the new government coming in, they do have quite a big commitment to grow the sector and try and actually look to double the sector and grow to help support a diverse and thriving and resilient economy. So I'm hopeful now that 30 years ago there was a big reduction driven by various different factors. That has stabilised, and hopefully we're now in a period where we're beginning to grow and really members and the wider UK population can begin to understand the benefits of that membership.
So this is something that's quite interesting, and I think for me it comes down to the kind of the ethics and the priorities of a mutual, because a mutual is defined by what its members want, and that is one thing in and of itself. But demutualization effectively comes with a process of you become beholden to shareholders rather than mutual members. And I found a list of kind of building, and you mentioned a couple of names there, but a list of building societies that demutualized in the 90s and early noughties, and some of it's a bit of a name and shame list of kind of stuff that went really badly wrong during the financial crisis. You have like Northern Rock in there, Cheltenham and
Yep.
Gloucester, Alliance and Leicester, and these names are names that got rights caught up in the financial crisis and ended up being basically nationalized or shipped off to other bigger banks in order to save the financial system. So my question here would be: does the demutualization come with the risk of businesses becoming, starting to make choices that aren't necessarily that not good or bad, but perhaps more risk? I don't know. Is there an issue there? It strikes me, the names alone kind of strike me in that sense.
Yeah, but there have been some some successes, but I think there's probably a bit of a different drive and focus from being a member-owned organisation versus being shareholder-owned. For us, we're very purpose-driven, and our purpose is about helping and supporting families achieve a lifetime, of financial security. That's really important to us, and how we serve our customers, how we bring that to life, the products that we offer. That's our primary focus. That's our only focus. When you introduce shareholders into it, you then start you've got an external focus. You're actually reporting to the market. You're having to deliver investment returns. You're having to show share price appreciation. You're having to pay dividends. So there's just many more people with different time horizons, different perspectives, and different potentially conflicting outcomes for them. What's good for my business is good for the members. What's good for shareholders may not necessarily be good for the members. So you can get yourself involved and have different time horizons, plus actually different objectives that you're trying to achieve. The businesses I've worked in that have been shareholder owned, we've been very focused on the fact that good outcomes for customers, good outcomes from colleagues becomes a virtuous cycle, and that will ultimately lead to long-term business success. That is absolutely what we're trying to do at Scottish Friendly. That's what we believe in at Scottish Friendly. But we don't have shareholders driving a different agenda or a different time frame. So I think there's different pressures being shareholder owned than being owned by members, which can lead to different actions and maybe having different overall objectives.
So you mentioned there as well that the new government has got an interest in seeing how kind of mutuals can be kind of beneficial and whether they can provide a different kind of, I guess, framework for financial businesses that would lead to kind of better outcomes. What do you see as kind of that value now in 2024? What should we be setting up new mutuals? Should we, or should we be encouraging financial businesses to become mutuals? Like, what does the future look like for this kind of idea, this old-fashioned idea that seems to still work in the 21st century?
So I think we definitely, being a mutual resonates when we can actually communicate what it actually means. It really resonates with customers. It really resonates with the UK population, which is fantastic. I think we do struggle a wee bit to actually communicate. You mentioned John Lewis is a fantastic example of a business that has for a long time been communicating to customers around their actually being member owned. However, do people, when they're taking a decision to buy a television, do it based on that rationale, or they do it based on the price, right? So, and that's where the challenge sometimes can come in. So for a mutual, you have to provide products and services, and they have to, you can't rely just on being a mutual to justify the price and the purchase decision. You have to be competitive. In the industry we're in, there is a large cost of actually being in business. We're heavily regulated, and that drives a lot of costs through the organisation. So actually, unless you've got a lot of support and a lot of backing, it can be difficult to enter this market. And as I said earlier, being a mutual, your access to capital is limited. So it's actually quite difficult for a new mutual to enter the market and then grow quite quickly, because the way capital requirements work, the way the funding works, actually, it can be difficult. The government has actually been started off before the election, is looking at that to see actually is there things they can do to help and support mutuals grow. But really, in financial services, as you've seen over the last decade in particular, huge amount of consolidation, mainly because of how competitive the market is and the high cost of actually being in business. So new mutuals could come in. Yes, there's always new mutuals across different sectors being started, but actually for a new mutual to come into financial services and grow from scratch and to be very successful over a short time is difficult. And because it's difficult, that actually makes it less attractive to people to try and start. So yeah, it's more likely that existing mutuals will grow than a new mutual that we've never heard of will join the market and actually grab a big chunk of.
So there's perhaps an argument there for looking at the way some of the things like those capital requirements and this kind of thing and kind of reforms that can be done, perhaps that help mutuals, become a stronger force, shall we say, if that's something that the government were to want. Thinking about kind of who. And you mentioned, ultimately, a lot of the time it does come down to kind of what is, the best value for the potential customer who then may become a member. And with your own customer base, do you have a kind of a profile of somebody who is a typical Scottish friendly customer? Because I like that it's got this kind of. It may not necessarily be like that today, but there is a kind of element of working class roots there, and community and that kind of focus. Is there still that sense in your customers and your members? It would be interesting to hear if it were, basically.
It's funny because our actual customers today are probably very representative of the whole population. So we probably have a similar spread. So, but we know that we resonate much, much stronger in certain demographics. So there is a bit of Scotland north of England that probably resonate quite strongly there, and that's maybe because of the name and Scottish Friendly and the brand, but also probably because of where our business has grown from historically. But when we look at the people that we resonate with, it tends to be people that are looking, trying to look after their families. So it tends to be either grandparents looking to invest a bit of money for their children, or parents that are actually beginning to get to the point that they're not just surviving, they're beginning to actually look to the future. So those are the two groups we're looking at. Once you get into much more well-off people, they tend to go through advisors, independent financial advisors, and we don't deal directly with those, and they tend to go to the bigger organisations. But we're looking at an area of the market that's relatively underserved, but does resonate really, really strongly with mutuality and particularly with Scottish Friendly.
Yeah. Do you, as an organisation, do you kind of engage with a lot of kind of community involvement, programs and charity and that kind of thing? Like, and is that something that kind of sets mutuals out? Because I know, companies engage in charity work all the time, and it's good PR, it's good, it looks good to be doing good and that kind of thing. But is there a kind of added, I'm trying to think of the right word here, almost like, I don't want to call it pressure, but an emphasis on doing community-based stuff, I guess, would be
Yeah. One of the things that's written into our rules is that we can look to invest some of this society's resources to that wider good. So we're actually, in our constitution and rules, we're actually empowered and expected to do that. So, and that's probably true of most mutuals, because they all started out as community support groups. So therefore, actually expanding that out and supporting your wider community is at the heart of, the people that work here, is at the heart of our organisation. We have 3 different arrangements that we support, and all of these are really about trying to impact individuals and make a difference for individuals. We recognise how, just the size of our organisation, how much we can actually do, and we want to make a real difference. And they're all around children and young people. So the first one is, we have been a long-term sponsor of the Scottish Book Tour, which takes offers into schools, and it's really focusing on literacy. And the reason we're passionate about that is we know that literacy is actually the single biggest driver to outcome as people mature into adulthood, right? So the more literate you are, the better educated you are, the more likelihood you are to either go to higher education or further yourself. And we know all these things lead to better financial outcomes for people, right? So we're really passionate about literacy as a core tenet to actually helping and supporting outcomes. The next group we're working with is Action for Children, and they're a UK-wide charity, and they do lots of things, but where we help and support them is we provide the funding for 2 members of staff to actually go into local schools, so schools in Glasgow, to help with the mental well-being of the children in those schools. And I myself went along to a session in a school recently, and it's amazing to see the impact they're having in those kids' lives. And these are some of the most deprived schools in the UK. So actually being able to make a big difference to those kids, really something that we believe will help and make a difference. We also support them through fundraising and all that sort of stuff. And then the last organisation we partner with is Developing the Young Workforce. And that's really their objective, is for all children leaving school to have a good outcome. And that good outcome is either moving into an apprenticeship, moving into work, moving into education, or they might have other duties, right? But they're really looking to get a good outcome, and we support them through modern apprenticeships. We bring some of the children in as employees. We help them with preparing for interviews, writing CVs, understanding the workforce and all that sort of stuff. So all of those things are linked to trying to help children as they become young adults be prepared and get a better outcome and really make a difference. So I think for us, something we're all really passionate about, but most mutuals have this sort of community charitable focus really at their core.
I think the literacy stuff is really admirable. We talked about on the podcast with a different guest recently. Kind of literacy. Most people tend to have. I think it's like an average literacy age of about 11 years old, and that kind of thing. And the complexity of financial communication means that so many people kind of struggle to understand the products that they're forced to deal with on a kind of daily basis. That kind of do you think a mutual like Scottish Friendly approach is that kind of the way it talks about its products to members? Is that inherently different to a kind of a normal financial organisation? Is there a different way to approach it, do you think?
We definitely are trying to do it, and trying to we're trying to make a bit of a play in the word friendly and what that means. And we talk about providing friendly products and customer care. And you're absolutely right about literacy. I think financial literacy, so people reading and understanding our communications, probably drops to about 7 years old, so it's not even 11. Yeah. And yet we're writing them as highly educated industry experts, right? And there's a significant burden of what we call compliance requirements. Okay, so here's all. It's like the terms and conditions that you get sent, and there's pages and pages of them. We, as a heavily regulated industry, we need to do a lot of that, and I think historically we have put compliance or ahead of understanding. So requirements ahead of understanding. And I recently asked the regulator with the introduction of consumer duty, were they supportive of putting understanding as the primary reason for all communications and put compliance secondary? Because actually people don't understand the products and services they have, and we know it's difficult, we know it's complex, but if they don't understand it, how do we know they're actually getting a good outcome? Okay, so we are massively passionate about simplifying communications, easy to understand products, and helping and supporting our customers.
That's coming down the tracks now, isn't it? There was a recent announcement, or it's in the works with Consumer Duty, that actually they're going to kind of start peeling back a lot of the kind of the rules, that let's call it red tape, in order to kind of just really say, look, this is the consumer duty. This is your duty to your customers. You need to figure out, if it's serving that, and it's up to you. For you guys, is that? I mean, obviously you've taken that to the regulator yourself, so you guys are obviously interested in those outcomes. Do you think we're going to see? I mean, not trouble, but an adjustment? As this kind of stuff moves through, I think it'd be interesting.
Yeah, so we are super excited about consumer duty. It's Scottish friendly, because we do think it's a shift in the regulator's focus towards driving good outcomes. And previously, I would have said the regulation was more focused on preventing bad outcomes, which is very, 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 very different from trying to drive good outcomes. Okay, and communications is a good example of preventing bad outcomes. As well, we'll document every single thing, and so you'll have it, whether you understand it or not. We don't know. So we think it's a big step forward, and I think you'll see quite a lot of change in the industry for the better as we try and leverage that. There's other work that the regulators are looking at around advice and guidance boundary, which again is a big opportunity. I think a lot of companies are scared of that boundary and therefore avoid giving guidance because they're worried it might be construed as advice. If we can do some work on that to allow us to give much more guidance, combined with simpler products and services and communications, I think you then really begin to help your customers achieve that better outcome. So this is probably the most excited I've ever been about regulatory change in my whole career.
It's not a terribly easy thing to get excited about, but if you're excited about it, then I'm very encouraged, basically. No, I think that's really. I mean, I'm always been for one for trying to simplify stuff. So I kind of agree in the sense that actually, if you make stuff simple and clear, then everybody ultimately kind of benefits, as long as the people at the end who are kind of consuming whatever it is that you're selling are not getting into any kind of trouble. What do you for mutuals and the future? I mean, thinking ahead now, where do you see things really changing as we kind of? I guess we've kind of brushed through it a little bit with a different government, with different priorities and that kind of thing. Where do you? Just to kind of round us off a little bit, where do you see things moving in the next few years for mutuals?
I definitely feel as if across the globe there was a bit of momentum around much more of giving back and the wider impact that we're actually having. So I'm moving away from that real consumer consumption that we all had, and the throwaway type culture towards that much more circular economy. That was probably COVID and all that sort of stuff really, really disrupted that. But I do feel underneath all of it, there still is that, that pressure and that momentum building around actually. I'm not just here for myself. I'm thinking about what I'm leaving behind, and I'm thinking about the generations that come after. I think that plays really, really strongly into the space where mutuals actually are, and really, really want us to try and be able to communicate that. And how do we bring that to life, and how do we actually demonstrate the value? But I do recognise, if you think about people that have spent a lot of money over the years trying to communicate the value of mutuality, so you've got Nationwide, and John Lewis, the Co-op, all these big mutuals have struggled to get that message across. How do we work together? How do we bring that to life? How do we let people understand? We're trying to do it through the products and services we provide, but I do feel there's a big opportunity to bring mutuality to life, and then play into that, what I see is a growing sense of actually, let's do something for the greater good, not just selfishly for myself.
I think it's a potentially powerful idea there, right? We spend a lot of time talking about ethical governance and investing and all this kind of stuff now, and actually it's these organizations that have hundreds of year old structures that actually potentially have the future of doing it right, where and you have a set of rules and regulations that are directed towards the outcome of the end user, and the kind of an organization where the members are the priority because it's created around them, right?
Yeah.
And that's what's powerful there, and it's a different. We can kind of talk about the good and bad of the stock market and this kind of thing, but actually, a community created and led and that kind of organization, it has power because it has people at the heart of it and behind it, and I think that's really interesting.
And where we really see the benefit, I'm saying there's definitely, we do see some customers that get it and do transact with us because of that. Where we see real benefit is actually the people that come and work for us. That's where, and therefore we get a much higher quality of people come and work for us because they want to be involved in an organisation as a mutual. And that then allows us actually to be better and provide better services. So that's what probably, I would say is a real structural advantage for mutuals, is you probably just are able to attract people that are strongly aligned to your purpose, strongly aligned to actually being customer centric, and that actually, gives you a bit of a leg up and what you're trying, and creating that virtuous cycle of good customer service, great colleagues, driving long-term performance.
That's really interesting. Thank you, Stephen. I think this has been a very enlightening on mutuals. As I said at the start, not an area that I think enough people spend time thinking about, but something that's certainly a powerful idea. So, Stephen, thank you very much for joining me.
Okay, thanks very much for having me on.
And thank you everybody for listening. Obviously, you can catch us on Apple and Spotify. We are now on YouTube, and you find us on social media too, on places like TikTok and Instagram and Twitter and those kind of things. And of course, you can check everything else out on the Mouthy Money website and newsletter. So thank you once again for listening today, and we'll speak to you again soon.